Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. In the past, the core pattern here had been the late 2022 head and shoulders tops and ascending triangle patterns. You can see them disappearing away in the top left of my daily chart. They had been the core influence to push prices lower, but there has been a more recent pattern that has greatly influenced the more immediate market. It is the mid-June to early August bearish shift pitchfork, highlighted in dark blue on my daily chart. The bearish shift pitchfork has started to show the true bearish angle of attack of this market, as prices have over the last 3 weeks moved down to test the lower time, currently at 18,300, as well as supports dating from 2019 to 2020 and 2022. Between 18,230 to 18,850 zone, and then at 17,810, and again between 16,610 to 17,095. The most recent test had been the lower time, as well as the July 2022 low at 18,230. Today, this looks like it may have given way, and it caused two things to happen. Firstly, I now look to the October 2019 high support at 17,815, that's below. Plus, I drew a more acute and smaller August-based bearish shift pitchfork, highlighted in bright green on my daily chart. Now, this is not a perfect pitchfork by any means, as the upper time, currently at 18,345, has been breached a number of times. However, the upper time has also been repaired a number of times. Thus, it's worth looking towards the middle time below, currently at 17,275, or at least keeping a wary eye on it, as well as the June 2021 low at 17,095 and the May 2021 low at 16,610. Please just bear in mind this is only a first attempt below the original dark blue bearish shift pitchfork. I would ask you to bear my words of last week in mind, and I quote, "Until prices break out and below the lower time, and properly by an absolute minimum of 2 consecutive closes below the time, then this bearish shift pitchfork will run the angle of attack of this market." And that's the end of the quote. LME 3-month zinc. Last week I started my commentary by stating the following, and I quote, "This market has exited one pattern, a bear channel dating from April to mid-June, into another pattern, a shallowly rising bull channel from mid-June to mid-August, then exited that into a third pattern, a late May to mid-August bullish Andrews pitchfork, highlighted in dark blue on my daily chart, and is today testing the combination below the lower time of this bullish Andrews pitchfork and a slowly rising medium moving average. The medium moving average is currently at 24.41. Going back to the quote, I've yet to see if this bullish Andrews pitchfork may morph into a bullish shift pitchfork, but right now I'm not too optimistic on any such new pattern running the angle of attack, especially after the good job the bullish Andrews pitchfork has done." End of quote. Well, no sooner had I said this when the bullish Andrews pitchfork has indeed morphed into another pattern, into a late May to mid-August, shallowly bullish, well, really to me, too shallowly bullish shift pitchfork, which I've highlighted on my daily chart in bright red. This is not a perfect pattern by any means, but it's still there. However, in the bigger picture, the market has still maintained its position within a very large May to August 2022 bearish shift pitchfork, at the moment just over the middle time, currently at 23.01, which is highlighted on my daily chart. Now, take a moment. I just wish to emphasize how this bearish shift pitchfork is now well over a year old, and it is still working in driving prices lower. But it should only be seen in the bigger picture context at the moment only. I wish now to dwell a little longer on the somewhat contradictory nature of this market, perhaps seen as indecision, but on a bigger scale than just this daily chart. You see, in the last week of September, we had a weekly key reversal up that almost made it as high as the descending long moving average, currently 26.65. Yet the very next week, we had an immediate countering weekly key reversal down. The one that has led to the break of the bearish Andrews pitchfork and the morphing into the shallow bearish shift pitchfork. This to me has been indicative of some longer term indecision in this market, such as the recent bullish shift pitchfork counters the longer term 2022 dating bearish shift pitchfork. That is why I'd like to point out another potential pattern in the making. The actions in October have already set up the market to make a possible monthly key reversal for October. Thus, if we have a close on Tuesday next, the 31st of October, either above 26.57 or below 24.34, then we'd be on. Anything in between and would have the lesser outside month. Right now we're looking at a monthly key reversal down, if just. In the immediate term, I'd keep an eye on the overhead flatlining medium moving average, currently at 24.42, and short medium moving average, currently 24.60, as well as the congestion below at 23.97.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.